Hey everyone, welcome back to Corporate Decoder. Today, we're diving into the financial world of Cherry Hill Mortgage Investment Corporation. It sounds cozy, right? Well, get ready because their recent report has some twists and turns that might make you spill your coffee. We're looking at their most recent report dated early March. It's an 8K filing, which companies use to announce major events that could affect investors. Cherry Hill Mortgage Investment Corporation, that's quite a name, isn't it? But what do they actually do? They're in the business of investing in mortgages. Essentially, they make money off the home loan market. They buy and manage mortgage-related assets, hoping to generate income from the interest payments. So, when you hear about mortgage rates going up or down, that directly impacts companies like Cherry Hill. Let's get into the meat of the matter, their financial performance. The report highlights their results for the last quarter of 2024 and the whole year. This is where we find out if they're swimming or sinking. Now, it's important to remember that mortgage companies are sensitive to interest rate changes. If rates rise, it can become more expensive for them to borrow money, potentially squeezing their profit margins. Conversely, lower rates can boost their business. It's a bit of a balancing act. The company issued a press release along with the 8K, trying to present the numbers in the best possible light, but we are here to crack that code. Unfortunately, there are no specific numbers in this 8K filing. This document primarily confirms the release of their financial results. It's crucial to understand that this 8K and the attached press release are furnished to the SEC, not filed. That might sound like legal jargon, but it matters. It means that while they're sharing the information, it's not subject to the same level of legal liability as if it were formally filed. Companies often do this with preliminary announcements. The report doesn't dive into the specifics of their mortgage portfolio, but we can assume they cover the types of mortgages they're holding. We don't know from this particular 8K filing if they are focusing on government-backed mortgages, like those from Fannie Mae or Freddie Mac, or if they are dealing with more risky non-government mortgages. The type of mortgage affects their level of risk. Government-backed mortgages are generally safer but offer lower returns, while non-government mortgages can offer higher returns but come with a greater chance of default. Without the specific financial data from the press release it references, it's tough to give a detailed analysis. However, the fact that they're issuing an 8K suggests that there's information they consider important for investors to know. Now, looking at Cherry Hill Mortgage Investment Corporation more broadly, we can make some educated guesses. Given the economic climate of 2024, with fluctuating interest rates and an uncertain housing market, it's likely they faced some challenges. Mortgage companies had to navigate rising rates, which could have impacted their ability to generate income. There might be some interesting risks or opportunities for Cherry Hill. If interest rates start to stabilize or even decline, that could be a boon for them. Lower rates could spur more home buying and refinancing activity, boosting their business. On the other hand, if the economy weakens and defaults rise, they could face losses on their mortgage holdings. There could be opportunities to diversify their mortgage portfolio. Instead of only focusing on one type of mortgage, they could spread their investments across different types to reduce risk. Also, there could be a chance for them to become more efficient in how they manage their assets. By streamlining their operations, they could potentially increase their profitability. In conclusion, without more financial data, it's difficult to say definitively how Cherry Hill performed. However, understanding the broader economic context and the challenges facing mortgage companies helps us to interpret this report. Keep an eye out for their next filing, where we hope to see more raw numbers to get a clearer picture. Thanks for watching. If you found this breakdown helpful, please like, comment, and subscribe. It helps us keep decoding the world of corporate finance.